Hey there, folks. Happy Friday to you. I hope you had a fantastic week trading. Coming at you with this week's market wrap and sector watch video. Interesting week, interesting day, interesting end to the week. End of the week. The big event being the Jackson Hole meeting, where the Fed indicated that they are ready to raise rates. That was the indication. Didn't give us a timeline on that, but and then we had another Fed member indicating that maybe we're going to raise the rates 2 times before the end of the year, which put a little pressure on the markets when that was said. So the markets seem to believe what came out of the Fed's mouth because, and we could see that because the dollar strength. We had a really nice pop in the dollar. Okay, if you read the blog this morning, I mentioned the fact that we were bumping right up into a short-term trend line. That was this line here, and we exploded through it today on pretty good volume and closed near the high of the day. So that indicates to me that at least somebody out there is believing that rates may be rising, right? So along with the strong dollar, we saw some weakness, and we actually saw some weakness in gold and silver all week, and the miners. All right, so let's just take a look at gold real quick. It had an initial pop, and then pulled back, nearly closing at the low of the day. GDXJ, GDX, JNUG, Nugget, not a good week for those, for the miners or the miner ETFs. We got a reverse split in JNUG, or no, not a reverse split. We got a split in JNUG and Nugget, and reverse splits in Dust and JDust. And for the first time in a long time, JDust and Dust are have a higher price than JNUG and Nugget. But listen, if you look at what's going on here, this GDX, broke through this trend line, and pretty convincingly, pretty good volume. Now, this trend line likely will act as resistance on the way back up. So I would be very cautious trying to go long in GDX, GDXJ, Nugget, or JNUG. You may get some real quick snapback bounce plays, good day trading opportunities, but I would be very cautious there. If they really break down, if gold really breaks down, if the dollar continues to rip higher, gold really breaks down, you could have an opportunity in Dust and JDust, and we'll just take a look at those real quick at the levels of interest. If we break through on Dust, if you break through $36 with conviction, I think maybe you go up here and you get a 40 tag, right? I mean, listen, if these things really, these are 3 times leverage. So if gold really does tank, if gold really tanks, if JNUG and Nugget really tank, these things could rip in a heartbeat, okay? So going up and testing 40 would be no big deal. JDust, if we break through 30 with conviction, I think you could get a 35 tag and maybe even go up and test $44. So, but you're gonna have to see some of the junior miners really take a hit, and they're gonna really take a hit if gold really takes a hit. So keep an eye on that. So that's gold. Let's go to the next area that was a big problem this week, and that was the IBB and the healthcare sector, right? And this is all because of Mylan and the EpiPen, and every senator, congressman, anybody that wants to get on TV on the financial networks and talk about regulations and greedy drug companies and all this other stuff. I mean, this sector, Hillary Clinton threw out a tweet, the White House had a statement. I mean, it was a big deal this week, and the IBB became a punching bag along with the healthcare sector. So during the week, during my market wrap and sector watch for the pro members over at alphawolftrading.com, I we were focused on this 286, 287 area as potential area of price support. Why? Because it was resistance, resistance, and then we broke through, and now it pulled back, looking for it to hold as support. Well, we didn't get that. We wound up pulling back. But our next area that we identified as potential support was the 200-day moving average. And on Thursday, even though we did pierce the 200-day, we managed to bounce back and close really right on top of it. And then today, even though the overall markets were weak because of this fear of rate increase, the IBB actually managed to hold that 200-day. So there's a little bit of a positive there, for me at least, in the IBB. Listen, if we break through the 200-day with conviction, then the next area of potential price support likely comes down here somewhere 273, 274 in that area. If that breaks down, then, listen, we're coming all the way back down maybe to 263 and a test of this trend line here. So we'll see what happens next week. I am somewhat encouraged by the fact that it managed to hold that 200-day moving average. So listen, if it breaks down with some real conviction, you may have an opportunity to make a trade in LABD, which is 3-time bear for biotechs, right? That could present an opportunity for a trade if we really get some weakness, continuation of weakness in the IBB. It's my hope that maybe by next week we'll have something else to focus on besides myelin and the EpiPen, and we can get maybe a little recovery in the space. And if that's the case, maybe we look at playing LABU for a bounce. If LABU winds up taking out 38 with some real volume or conviction, then we could be looking at a potential pullback down all the way down to 32 or something like that in the LABU, 31, 32, somewhere like that. So keep an eye on those two. So let's take a look at the IWM. IWM had a, it was like a little nothing day. I mean, to me, still consolidation, right? I mean, if it breaks down below 121, maybe we go down and we test the 118, 119 area where we could find some potential price support, right? Looking back here, maybe find some support in this area, 118, 119. If it breaks down below 119, then maybe we're going to come test this 115 area. But for right now, it's still consolidating. It has not given us confirmation that things are breaking down. I know we're heading into September, October, which are considered to be the worst months historically for the markets. That is true historically. However, everybody and their brother is talking about that, and everybody and their brother seems to be positioning for that. So my problem is that everybody is positioning for that, or seems to be positioning for that, and the market rarely does what everybody is positioning for. So that's the only thing I would say. Until we get confirmation, be cautious. I would not be jumping into any of the short ETFs or short positions with both feet. Even if we break down through some key technical levels, the first break through a key technical level could be a head fake, right? I mean, that's what's been happening for a while. We've had these breakdowns. Everybody gets emboldened to be short. They jump on, and then all of a sudden, boom, we get a huge snapback, and you get your face ripped off. So if you're going to try that, just make sure you're positioned correctly. Your sizing is right. Don't get overconfident that, things are just going to collapse and we're going to have an avalanche of selling in the market. So it could happen, but wait until we get confirmation. Let's see, what else? So the IWM, until we see it break down below 121 with conviction, I just don't see anything to be really worried about right there. Let's take a look at the S&P 500. Pull back a little bit today. I mean, it is displaying a sign of weakness. Has it completely collapsed, rolled over, broken down? No. It's still just a little bit of a pullback is what it is right now. If it breaks down below 2150, then we start maybe to look to get more aggressive with the short ETFs and that type of stuff. You know, maybe it comes down here and test 2100 area, but for right now, we're just consolidating. Now, listen, if the small caps do roll over, look for an opportunity in TZA, right? If IWM does roll over, break through a key level, TZA could present an opportunity. You know, if it takes out 29 bucks with conviction, I think you could easily get a test up to about 31 in that area. So keep that on your radar. Also, keep an eye on volatility, right? TVIX and UVXY. I mean, we had some good range today in TVIX and UVXY. I mean, look at that range from 21 bucks up to 24 bucks, right? That's a pretty good range. If we do start breaking through key levels of support, we're going to see volatility, right? If fear really starts to come into the marketplace, you're going to see some volatility. So keep an eye on TVIX and UVXY. I mean, look at the range that we had in UVXY today, up to 22 from 1920, 27. Pretty good range. You know, if we take out that 22 bucks, 22.50 with volume, with conviction, I think you can get a pretty nice little pop in UVXY if some real fear starts to develop. So keep those on your radar. Let's take a look at a couple other things that may be giving us some red flags. Retail, which, you know, was looking like it was trying to make a little bit of a comeback. And let's just back this out to the weekly. And I was talking about this with the pro members this week. This is the long-term dominant trend line, which we broke through back here, tried to reclaim it, failed, pulled back below it, and we've been marching back up towards testing it again. And it appears as though it's going to act as resistance again, and that could be problematic for the retail sector. We could be looking at pulling back, maybe in testing 43.50, somewhere in that area. Transportation is another one that could be signaling a little bit of a red flag. Okay, tried to get through this 143 area, was unable to do it. I mean, we had a little pop, pulled back. You know, if you look at it, back it out, you know, it kept testing that trend line, We finally busted through it, consolidated a little bit, then failed, bounced back up, and we could be failing here again. So, you know, what we want to see here now is if this trend line, this longer-term trend line, can act as support for the transports. If not, maybe it has to come down here and test this 137 area and see if it acts as support there for potential price support, 137, 136, right in that range. So let's see what else we got going on. So SMH, let's take a look at the SMH. Looks incredibly strong, right? I mean, flirting with the $66 holla, holding the 8 EMA. I mean, from a long-term trend perspective, the SMH looks incredibly strong. Could it look, if the rest of the market rolls over, SMH is likely going to follow, even though, you know, it's as strong as it looks. If the markets roll over, SMH will likely follow. So, you know, where would you look for an potential support? I would be looking somewhere around 62.40 in that area, 62.50. If that failed as support, then maybe we come down and we test the round number of 60. But for right now, it still looks really, really impressive. Oil, you know, oil managed to hold up fairly well this week. Had some chatter out of Iran that, you know, maybe they're interested in helping boost or support the price of oil. So had, some mixed reactions in oil and energy names this week. Now look at the XLE. I had a little bit of a pullback. I mean, it broke over this trend line here, 69 and change was the area of price resistance, broke over, pulling back. Now we'll see if this can act as support or if it winds up breaking back through and coming down, maybe testing the $68 area as support. We'll see. Home builders had a little bit of a pullback, which makes sense. Rising interest rates, even though we had some good home builder earnings reports and we had some decent housing numbers, pulling back off of the thought of potential interest rate hikes. Industrials pulling back a little bit, and that could also be because of rate increase, right? High yielding, a lot of the industrial names are. Let's see what else we got going on. Consumer discretionary, just kind of consolidating between these 2 points of support and resistance, but nothing that is signaling, gee, we've got a full-blown breakdown happening. XLV, let's take a look at this healthcare real quick. $73 is acting as potential support, which is good because that's where I would have hoped to see some support, right? Act as resistance, act as resistance, act as resistance, act as resistance. Now, hopefully, act as support. If this Mylan thing goes away over the weekend, we find something else to talk about next week, maybe we get a nice little bounce in XLV because I do think the sector was unfairly beaten up this week. All right, so what else we got going on here? Metals and mining, right? Look at the metals and mining. Look at the long-term trend. Broke through it. Now trying to reclaim it. This is going to act as resistance. And, if the dollar continues to strengthen and gold and silver continue to weaken, I think you're going to see those miners continue to weaken as well. So doesn't mean we couldn't get a nice little snapback, some snapback trades in there, but for right now, that looks like a sector that's under some pressure. Okay. Oh, last one, and then I think I'm just going to wrap it up here. XLF, right? Held up really well. I mean, if you look at what XLF did here, it broke over this longer term trend line, right? Consolidating, got a nice little pop today on the thought of interest rates going up, which totally makes sense. If interest rates go up, banks are likely going to do well. Banks are more of a swing or long-term trade than they are a day trading opportunity. But if the market seems to be convinced that the rates are going to go up in September, banks could be the place to be. So worth keeping an eye on that sector. And I don't think I have anything else. So look, we'll see what happens next week. Could be a defining moment for the markets as we head into, as we close out August and head into September. So I will be doing stocks to watch live Sunday, 8 a.m. Vegas time. If you have some stocks you'd like me to take a look at, email them to me, tweet them to me. I will do my best to get them on the list. If you are not going to be there and you don't have any stocks you want me to look at, that's cool. Enjoy the rest of your weekend. Have fun. Be safe. And I'll see some of you on Sunday, and the rest I'll see next week.